Okay, welcome to the Module 2 SLP for FIN301, Principles of Finance. This is on present value and bond valuation. What are the risk preferences of investors? So Module 2, we're asked to pick three stocks, one for a risk-averse investor, one for risk-loving, and one for an investor wanting to make average risk investments. All right, if I'm risk-averse, that means I don't want a lot of risk. So I'm going to invest in a utility company like PSE&G, which has a beta of less than 1.0. So I'm going to have a low beta investment. I'm going to have some other characteristic that's going to make it low risk. Inverse correlation to the market, large market cap, diversification of industry. So, a big cap weighted company like Samsung, Sony, Google, Apple, those are relatively low beta, low risk companies. Risk loving would be a smaller company, more aggressive, high beta. It might be a big company that just has a really high beta. Beta is volatility. You can look that up on Yahoo Finance. It says beta. If a beta is greater than 1.0, it means the stock is more volatile than the average stock. If it's less than 1.0, it means it's less. So, if its beta is 1.1, if it beta is between like 0.8 and 1.2, I'd say it's about within 20% of being average. If it's over 1.2, it's fairly high. If it's below 0.8, it's fairly low. So, if it's 0.9, you could still call it low risk, low beta, you know. So we want to see, these are the characteristics. They don't have to have a low beta, but if it's not a low beta stock and you're saying it's risk averse, then you're going to have to come up with a good reason why it's actually risk averse. Maybe it's because they would do well in a recession for some reason. They're like a dollar store, or they're, a bankruptcy firm or something like that, restructuring firm. Maybe, it's that's what makes it risk averse. So, risky would be tend to be smaller stocks, high beta stocks. A lot of Chinese stocks are high beta, small cap. So we want to know, we want to see the some of these questions mentioned above, right? We want to see some of the qualities mentioned above. We don't necessarily need to see all of them. So it doesn't, not every stock needs to have a low PE to be risk averse, but that's one reason it might be risk averse. So you can just, to answer this question, you just talk about some of these factors and how they apply to the stocks that you pick to make them either risk averse, risk loving, or risk neutral. And you need to, for this time, you need to include the following information: company name, ticker symbol, reason for buying, etc. All this information can be pulled from Yahoo Finance or MarketWatch, and refer to my last slide from the SLP1 overview, the last slide there, where I talk about Yahoo Finance. The last two slides of the SLP1 will walk you through how to get all this information. On Yahoo Finance, or you can do it on Google Finance or MarketWatch, TD Ameritrade, Thinkorswim, or any of a number of different databases.